Hello everyone, I'm Kunal Sodhani from Shinhan Bank India's Global Trading Center, and I'm here once again to discuss about global macro trends, its impact on asset classes and particularly on the currency pairs. Talking about the domestic factors first, if we talk about the FPI inflows in equities, in the month of November we saw around 9,000 crores of inflows, but in the month of December itself we have seen a whooping 15,500 crores of inflows in just first 4 days of the month of December. Why this has happened? It's clear indication that we had the elections where BJP has got a sweeping success in terms of Rajasthan, Chhattisgarh and Madhya Pradesh, which also acts as a reflection that once again in 2024 Lok Sabha elections they can have an easy victory going ahead, which the sentiment is showing, which is a reflection in terms of prices as well. On the other hand, if we talk about the FX reserves of RBI, they have also grown towards $598 billion, and the anticipation remains that what kind of inflows which have been seen, these have been more absorbed by the RBI, as we are not seeing any kind of appreciation in the rupee. So personal expectation remains that October 2021 highs of $642 billion of FX reserves may be also seen with time, as we expect that next year could be more volatile because there are a lot of elections, not only about India, but we have US presidential elections in the countries like Ukraine and Russia as well. So there can be uncertainties creeping up, and before that I think RBI is forward looking and probably thinking of building FX reserves as much as possible from here on, probably trying to touch the highs which was of $642 billion. On the other hand, we have the RBI monetary policy which is due on 8th of December, that is Friday, and we expect a status quo, nor any kind of OMO announcements we are expecting personally on that front. If we talk about the global macro trends, Brent crude prices have quite softened towards $78 per barrel, and this is because there is not much conviction about the OPEC plus decision on the supply cuts, where these levels are maintained on the lower end. But in terms of the technical charts, 76 acts as a crucial support for the Brent crude prices, with the resistance immediately coming around $83 per barrel. On the other hand, if we talk about the dollar index, the dollar index have been quite volatile, not reflection again on the rupee, but 102.40 quite strongly acts as a support at this point in time, while on the right side 104.37, which is also a 100-day moving average, acts as an important resistance to look out for. What is happening in terms of the rate trajectory and what is the anticipation now? A lot of federal members have been speaking, mixed about those factors. Some are dovish, some are still hawkish, some are still showing some concerns about the inflationary pressure. Powell has been having a blend of both, but the market anticipation is quite straight that they are eyeing a rate cut in March 2024 itself. If we talk about a CME data, that itself shows a 60% probability of a rate cut coming in the year 2024 and the month of March itself, that is the first quarter itself. So that swing has been seen. So at least no market participant is discounting any kind of rate hike. We also have a Fed policy due this month itself, but I think status quo is what is expected. Commentary definitely remains important to watch out for. Other countries like Eurozone and the UK have been struggling in their own ways as well in terms of flows, but inflation has been still cooling off there also. So I think the rate hike trajectory not only about US and India, but I think it may act as a peakish along the curve if we talk about several economies as well. But what is holding on dollar rupee? It's quite surprising that dollar CNH is in favor for rupee, Brent crude prices is in favor for rupee. If we talk about the flows in equities have been in favor for rupee, but dollar rupee has not been going below even 83.20 levels. The fact of the matter is these are hot money in nature. But if we talk about the pure money which stays in the country, the FDI flows, they have gone half as compared to the last year, which remains a concern. So this hot money picture may play in, which RBI has been utilizing to the best of its efforts by gaining or gauging more FX reserves in terms of curtailing any kind of uncertainties. So my personal view for dollar rupee here, for all the participants, there is 83.10 acts as an immediate support, while 83.60 acts as an immediate resistance. So some kind of consolidation may still continue for some more time within this range only. So that's all from my side, friends. Wishing you a very happy investing and trading sessions ahead. Thank you so much.